All right, let's take, there was a very strong move to the downside yesterday. Here again, this is a trending issue, and we're only going to be taking longs on a confirmation momentum positive on the 5 and 15 minutes. We need to see momentum positivity on the 5 and 15 minutes. We didn't get this yesterday. We were expecting it much higher at something like 60,700 actually, 60,500. This market did 58,400, about $2,000 lower because there were liquidations yesterday. I believe very high liquidations. Some whales sold out, and I'm not sure about the number, but we had very high liquidations. They drove Ethereum down and Bitcoin down. We believe the move has come to an end, and we would want to take a trigger. The trigger that we're looking to take yesterday should be implemented today. It is still trending. Bitcoin is still in a trend. Let's take a look at how or why should we consider that it's actually still in a trend, and then get back to do the live trade. We'll focus on the trade swings or tradable swings intra-week. And this is what we're looking on the 4 hours today. This is actually today's 4 hours. This is what has happened since yesterday. So it's always been this double inverted head and shoulders. We can see them very clearly here. Double inverted head, shoulder to the left, and we got the shoulder to the right. When we least expected it, we were looking to take out the red neckline and test either that internal level 1 or the higher neckline. And we're looking to support between the red neckline and level B. But the market, of course, had other considerations, crashed the neckline at level B, crashed the 200-point moving average. Remember here, we used to have a reversal trigger. The market should have supported the 200-point moving average. It rejected the 200-point moving average here. While the market broke that condition, but we believe we have a bounce. We'll be showing the bounce. It's out of a level 1. All right, so we have rounded up all the internals. Some labels got demoted. And we have a 1 and a 2 at that point. We have had a 3. I'm referring to the yellow labels, a 3 and a 4 at that point, with an A, B, and a C in the correction, and a 5. We get to see the segregation of between 4 and 5 on the 30-minute chart. We finished the leg A, we have finished the leg B. We are going to be doing the leg C. It is possible leg B is like an A and a B and a C before you do leg C, 3 swing. But I believe we have already 5 swings into leg B. In this leg B we have here, we have 5 swings. We're good. Today we get earning reports out of the stock market. Is this going to impact equities higher? Definitely. But is it going to impact? Probably, of course. Is it going to impact Bitcoin higher? Well, not definitely. Because usually there is no relationship so far between Bitcoin and the US Tech 100 or other equity groups. Okay, so assuming it doesn't impact it higher, if we do the long, we go on a trigger, of course, but we don't have the fundamental to drive us higher. Assuming tomorrow, for instance, we get very poor inflation, then everybody knows the US dollar is going to decrease, and Bitcoin, like gold, would increase against the dollar in terms of value, and therefore maybe we get that bounce. We believe that one way or another, we have bottomed out in a B and are going to be doing a C. Again, it can be a 1, 2, and a 5 swing into 3, into C. Very likely. That's why we're showing the green hour first. If we get a retraction and then continuation. Take it to 2 hours. The same structure, of course. It just shows the bounce zone where we believe we are. This used to be at that level 1. Now it shows it's a bit clearer. We have a 1 and a 2 at that point, a 3, 4, and a 5. Bounce is very close to that level 1. This bounce actually relates to an internal level into 4 and 5. Internal level 1 here. We'll be showing that on the 30 minutes. We should take a trigger, be on our way. Take it now to 30 minutes. All right, so we know we know that we have an A and a B. Let's take a look at the internals of a 5-wave swing showing here. There's a 1 and a 2, dot 1 and a 2, dot 3, dot 4, and dot 5. Round up high degree 5, that was a high degree 4. Go over the labels internally. We have a dot 1 and dot 2, Roman italics in 1 and 2, 3, 4, and a 5. This could be termed the leg A, then an A, B, C into leg B, but let's just say we have finished a 1 and that we have a 1 and a 2, 3, 4, and a 5. We should have finished a 1 at that point. We finished, of course, a 2 at that point. Right? We had another 1, 2, 3, 4, and a 5. At this point, we have a dot 3. We have a dot 4, and then we have a very broad breakout, 1 and a 2 in green, Roman italic, 3 and 4 in green, 5 in green. We have finished the dot 5. Everything is rounded up correctly. It's easy, of course, to round up after the event, not before the event. But even so, it helps us to locate the bounce points where the market, if the market is really bouncing correctly or not, and where to place the hedges to protect our entries long, and also where to take targets, how far the move may be expected to go. So we believe we have finished either leg A, we're waiting for B and C, or we have finished the whole correction. This is a very lengthy correction, shows you in great detail. The 1 and a 2, 1 and a 2 Roman italic, 1 and a 2, 3, 4 and a 5 English yellow. We have a 3, we have a 4 Roman italic at that point, then a very small 1 and a 2. Right, 3, 4 and a 5. Rounded up. I believe we should have a 5 in red here, equating with that 3 in red, but probably it's somewhere lower. Finishes leg A. We're buying into leg B. Should take us to 50%, 61,100, 61,900 is 61.8% or 38.2%. All right, that is the probable projection, and this will give us a shoulder level. You can see double shoulders to the right. So it looks like we're going to get a lot of, at least 1 or 2 shoulders to the left. So that B is an A, B, and a C into B before we get another C. And then we get a 1 and a 2, 3, 4, and a 5 breakout into high degree C. So the strategy would be to buy the bottom of the shoulders, take profit at the top of the shoulders. The bounce itself, the bounce comes here right on top of that internal level 1. Very clear now. There's a high degree level 1 at that point, dot 1, and then there is that internal level 1. So we take this live. If we have a trigger, remember a trigger is double positive momentum on the 5 and 15 minutes in this case. We buy, take it to 62,000. That's it, I believe. And that's all. And the hedge, of course, is just below the market bottom at that point after the trigger has ensued. Take it to 5 minutes. This was what was showing earlier. European session, 60,025. Right now, market is 59,700 or 59,800. We believe we have a trigger at that point. We have this line here. And the market has finished that last wave 5 in leg A in a wedge. So it's like 1 and a 2, 3. That is yes, 1 and a 2, 3, 4, 5. Finished. We probably have 1 and a 2, a 3, a 4 will not break below level 1. Then do a 5. We get some kind of shoulders congestion here. We have head and shoulders. Right? Or could be a triangular, be a single wedge, but you can also have an ascending triangle. We have a deeper bottom out here and a shallow bottom here. We join together. We have an ascending triangle, so we can still retract lower all the way to 58,700 before the market moves higher. That's why we have that green arrow there. Depends on the momentum. All right, so let's take it live now. Bear with us a second. We're not seeing any positive momentum yet on the 15 minutes. How about that trigger on the 5? Let's take a look at it. But we have a cycle extreme on the 15, I believe, and on the 5. Very deep cycle extreme. All right, so we wait for positive momentum. That's best. Remember, we believe we have a trigger at that point. A trigger means we cannot fall below this point, if this is correct. Even momentum shouldn't really fall below 0. So it becomes a bit easy to observe now. We don't really need to put in the labels, but we can see a 1 and a 2, 3, 4, and a 5 at that point. So 1 and a 2, 3, 4, and then we just have another internal 1 and 2, 3, 4, and a 5. They equate same highs. I believe we are going to go at least to the shoulder level, if not ahead. Again, if not ahead. Whatever it will be, we don't want to speculate. We just go on a trigger. Resources are dear, and we don't want to take chances or speculate with our money. And it's best to go on a trigger. Yes, we may go enter a bit higher, but at least the risk is very contained, and we are almost guaranteed the market should go move in our direction. All right, so this can even do a deeper head. Just to understand, we don't want to be hasty, and we have all the time really in the world. We want to do it right. This is the most important thing. Do the entry right. Very important because it's a good entry. It's a bottoming formation. It probably will take you to support one. Sorry. And if we go as low as 58,000, even wait for a confirmation, but enter at 59,000 takes you to 52,000, meaning we are going to be seeing at least $3,000 per coin. Right now, market is 59,438. And this can move all the way down to create a deeper head, or can just do shoulders. Of course, the momentum is not showing that it will do a deeper head. I doubt, but it can happen because we already have a cycle extreme, so we cannot have a deeper head. But we have to assume that it is also possible. Can do a deeper head and move higher, and you're seeing a broad wedge, right? But I believe because again the momentum has already, this is a 5 minute, it's all very small. The momentum has already done a cycle extreme, so the move is finished. And you can even see maybe a bounce at this point out of level 1. We still have to wait and see. Only go on a confirmation again on 5 and 15 minutes. So I'm assuming the worst, that we get something like a head and shoulders, double shoulders here. That's one way about it, but again, the momentum doesn't show we're gonna get this. Momentum really shows we are more like doing this. I believe. Anyway, we do not long until we get a confirmation. Confirmation is positive momentum on the 5 and 15 minutes. We are looking at a five-wave structure here. We're looking at the bounce out of a level 1. We're looking at, we are at the 200-point moving average. Are we seeing positive momentum on the 15 minutes? Not yet. But we are contained in terms of negativity, and therefore very likely we are going to get a confirmation. We just need to be patient. Once we break to at least support on the moving average on the 5 minutes and have positive momentum on the 15, we just need to buy market at that point out of the 5 minutes with a hedge below the market bottom. Hedge at that point is 58,500, for instance. 58,600 is also possible. This next bounce that we get will probably be seeing positive momentum on the 15 minutes. Maybe we will not be at the neckline, but we will be seeing positive momentum on the 15. Let's take a look at targets. So this clearly shows where we expect the bounce to come in. We're a bit higher than the bounce. First target is 62,500 is the pivot level there. There is possibility if we see good positive momentum, and we're not really seeing any negativity on the hourly frames. The momentum we're seeing here on the forwards is not really negative. We got the same momentum as a trigger, and the market took off, so possibly the same. So the first target is the pivot, 62,500. The next target is 67,000. There's also in between pivot and resistance one, 64,300. I believe we will get 64,000. We have a cycle extreme on the 1 hour, so we should be getting a bounce. Negative cycle extreme, of course, and we are not really negative on the 2 hours side out. We are contained on the 2 hours.